In this video, we're going to discuss several disadvantages of the corporate budgeting process. So, budgeting is helpful because it facilitates planning and control. And by planning, we mean setting goals, saying how are we going to use the organization's resources and coordinate with between departments to achieve the various goals of profitability and growth and so forth. And then control is about looking after the fact and saying, okay, did we actually achieve our goals? And wherever we fell short, let's go take action. Now, those are the good things about budgeting, but there are a number of issues that have led people to really criticize the entire budgeting process. And one of the reasons is that it's very time consuming, particularly to come up with good budgets. It takes a lot of time and effort, and you have to coordinate people between departments. People are spending time submitting the budget, and then it comes back. It's been approved. It hasn't been approved. And we've got fighting in some cases between people at different departments who are fighting over the resources. I think there should be more funding for my department and so forth. And so it can really lead to a lot of acrimony within the company. And in some cases, the budgets can be grossly inaccurate. If you didn't do a good job, really planning things out with the budgeting process, or maybe you did do a good job, but you lost a major customer, and so then the sales budget is off, and it was through no fault of your own. One of your major customers went bankrupt, so now your sales budget is wrong, so now the production budget is going to be off. And so in some cases, it can be really inaccurate, and then so you spend all this time making these budgets, and then they're inaccurate, and you say, okay, was this even worth our time doing this? And then another thing, that when you make the budget, you got to understand that managers, let's take a sales manager. You come to this sales manager and you're trying to make your sales budget, and you're trying to figure out, okay, how much sales is going to be generated by this particular sales office that's run by this sales manager. And let's say that sales manager thinks that they could do $20 million in sales. And you ask them, okay, I'm trying to put together the sales budget. How much sales do you think you're going to hit? They're not going to say necessarily 20 million. They might say 17 million, because they want to build in some slack. They want to build in some slack. They want to make sure if they think it's going to be 20 million, they'll tell you 17 or 18 or 16, so that if it in fact is 20, then they look good, right? They don't want to tell you 20 and then it turns out to be 19 and they're worried about getting fired. So what they're going to do is they're going to lowball the estimate. They're going to give you this low figure. And then so what's going to happen is you have this biased forecast where you thought, okay, instead of it being the true estimate, which should have been 20 million, you're getting hit with 17 million, and then it turns out to be 20, and you say, oh, wait, we didn't produce enough inventory here. We didn't realize that it was going to be 20 million of sales. So you've got these forecasts that basically the whole problem, it comes back to slack, is that managers are trying to protect themselves and they're building slack into the budget. Okay. Now, another thing is that, and I can't even tell you how many times I have heard somebody say, we need to spend this money because if we don't spend it, well, it's going to be the end of the quarter and we're going to lose this money. So they call that a use it or lose it mentality of, if you have, let's say, an extra $10,000 in the budget, let's say for the marketing department, they might say, okay, well, there's only a week left. If we don't spend this money, we're not going to get to use it next quarter. It's just going to go away. So let's spend it. Let's have a party, or let's do this, or let's do that. So in a lot of cases, it leads to just wasteful spending, because you have this money and people just say, okay, let's spend it. And in some cases, they have a real strong incentive to spend it, because not only would they lose it, but then next period they might get given less money, because it's like, oh, you didn't need that 10,000. Okay, I'll give you less money next quarter, next month. So, and then another thing is, when you come up with the budgets and you say, okay, here's how we're going to acquire resources. Here's what we're going to do. Here's going to be our capital budget, all right? We're in capital expenditures budget. And we say, here's what we're going to spend and so forth on different investments. And then in the middle of the quarter, in the middle of the month, in the middle of the period, some investment opportunity arises, and you say, hey, we didn't know about this opportunity before, but we have an opportunity to make a lot of money here if we were to invest in this. And then somebody comes along and says, hey, that's a great idea, but it's not in the budget. It's not in the budget, so we're not going to be able to take advantage of that opportunity. We'll wait till next year. But next year, maybe one of your competitors stepped up and actually did take advantage of the opportunity. It's not there for you. So it's basically lead to inflexible decision making, because everybody's kind of like saying, well, it's not in the budget, we can't do it, we got to wait till next period when there's a new budget. And then finally, employees can become very, very demoralized and depressed if you set the budget way too aggressively. So when I say aggressive, I say, okay, so let's say that in fact the sales manager is honest with you and says, you know what, I think we'll hit 20 million in sales revenue. And let's say they're being honest and that really is a good estimate. And you say, oh, hey, great, 20 million? I think you could do better. How about 24 million? Or how about 35 million? And they say 35 million? I think I could do 20. If I work really hard, we could do 20. And maybe if things go well, we could hit 24 or something like that. But 35 is not going to happen. So then people become demoralized and it's, you know what, I'm never going to hit this target no matter how hard I work. So then people tend to, well, I'm going to lose anyways. I'm not going to hit the target. So they just don't work as hard. They're not as motivated. People are more motivated when they actually believe that they can achieve the goal. So even though it's great, this idea of being aggressive and let's set these really high targets and so forth, you want to make sure that your manager and your employees actually believe that they have the ability to achieve that budgetary goal.